All right, what's going on, everybody? It is Wednesday, April 7th. Listen, I just posted the new podcast episode, so check it out. The link is here in the description below. Check it out. What else? I'm training for my Grand Canyon rim to rim hike. I talk about that actually in a podcast episode. That May 17th, I'm doing a rim to rim hike in the Grand Canyon, north rim to the south rim in one day. That's a little over 24 miles. It's like a 10,000 foot elevation change. You go down 14 miles from the north rim to the bottom, and then 9 and some odd miles back up to the south rim. It is a grueling hike from what I understand, and I've been watching YouTube videos of seasoned hikers doing this. By the way, if any one of you have done this before in one day, please leave your comments. I'd love to hear what your experience was. So I'm a little bit anxious. Look, I'm in good shape. You know, I recently did a 26-mile hike. That was tough, so I'm training for it, man. But, you know, I stay in shape. I work out every day. I run. I think I should be able to do it. But, you know, it's a little bit, the Park Service says, do not attempt to do this in one day. I'm doing it. People do it. So I'm going to try to do it. I think it's great, like, you know, just to put yourself up against these kind of physical and mental tests. This also, you know, adds to your overall being as a person. When I talk about things like mental game, when I talk about things like mental toughness, all right? Exercise, doing difficult things, doing things maybe that are scary. These are all things that build up mental toughness. Anyway, let's talk a little bit about economics. Today I saw like an unbelievable article from the Wharton School at the University of Pennsylvania. Actually, I went to the University of Pennsylvania, Wharton School. And I was kind of like, man, I was kind of shocked because they were talking about how the Biden, the infrastructure proposal, the infrastructure plan, you know, 3 trillion, whatever. They said that's going to result in a contraction in GDP. And I was like, whoa, really? Like I had to read what was their reasoning on this. And they talked about something so already, you know, kind of proven to be false. They said because it's going to, you know, all that borrowing and the deficit is going to go up. And all that quote unquote borrowing is going to crowd out private investment. And I mean, this whole idea of crowding out has been so debunked already. I mean, right now we could just see in real time how that has not been the case. I mean, the deficit last year went to like 11% of GDP. It was 2.7 trillion. You know, we recovered out of the a deep contraction from the pandemic, and we bounced back. Like GDP was up 34% in one quarter. All right, and now we're seeing this happen. Additionally, now with the, you know, we had that stimulus to 900 billion at the end of December. We had the one just now, 1.9 trillion. You know, they're talking about growth rates right now of 6.5%, maybe higher. So, I mean, we're seeing the evidence to the contrary, like in real time, right in front of your eyes. I mean, it's disappointing. It really is. I mean, a school like U of Penn, Wharton, I mean, you shouldn't be putting this stuff out anymore. I mean, this stuff has been totally debunked. Now, in a country that's on a gold standard, or a country that's on some fixed exchange rate regime, yeah, then you're actually competing for funds. But under a system like what we have now, or, you know, in Japan or the UK or something, I mean, again, this is pure MMT. I mean, the government is a currency issuer, and that spending adds to the, that net spending in excess of taxes, deficit spending, adds to the financial balances of the non-government. I mean, I think I talk about this every single day. The fact that personal savings prior to the pandemic hovering around what, 500-600 billion, which already was a positive, the non-government was a net saver. I mean, that went up to 6 trillion with the deficit increasing. I don't know how, it's one thing for these quacks out there to say stuff like this because they're just morons and they're selling some kind of, belief system that unfortunately lots of people buy into. But when you're talking about a high-level academic institution, well, I don't know. Am I being naive here? I mean, Harvard, they do the same thing. They still have that Ken Rogoff, who wrote that ridiculous book, It's Different This Time with the Debt. And the thing also was totally discredited. So I don't know. Maybe I just expect too much from these institutions. Maybe it's because I went there. I just don't know. This concept of loanable funds where there's a finite pool of money out there, and if the government, and it's not borrowing. I mean, again, treasury sales are what? It's a reserve drain. I mean, we've been all through this with the SLR and everything. The understanding, I think, even for a lot of you, is already at a high level. So this idea that there's this finite pool, and then when the government, quote unquote, borrows it, which it's not, again, it is crediting bank accounts. It is adding to the net financial balances of the non-government. That somehow this pool shrinks. Again, I mean, we're seeing the evidence that refutes this in real time. I mean, every single day. We're seeing it. So, hearing stuff like this is just, I mean, MMT's been out there now for a while. Everybody has heard of MMT. I mean, I think I said yesterday, I've been doing this for 20 years. And, before I caught on to this, I was like those other people who was in the wrong paradigm, just had a completely wrong understanding. I said all those things. China's not going to lend us money. We're going to go broke. The dollar's going to collapse. Interest rates are going to spike. All of those things. I was of that same mentality. And I guess, that's just because that's kind of like mainstream economics. And that's what I have my degree in. And it was kind of taught that way. Then I came across MMT, and it opened my eyes to a true understanding. I mean, again, if you want to, I don't know. It was frustrating when I read that. So, but on a positive note, I like when I see stuff like that because it makes me feel, I'm still kind of like in the contrarian view. Like when you have academic research, high level, an Ivy League school, University of Pennsylvania, Wharton, an esteemed, one of the top business schools, putting out stuff like that, lots and lots of people and institutions are going to listen to that and take that as, the gospel of what's going to happen, and which means they're going to be wrong on the economy. They're going to be wrong on the markets, which means this thing could go so much farther than anyone believes at this point. I think even me, as bullish as I am, there's going to probably come a point in time where I say, you know what? This whole thing is over, and it's going to keep on going beyond that. You know how these things are. On the downside, like sometimes people ask me, with a stock or an index, when it's in a correction, Mike, how far do you think it could go down? I don't know. Like, anything is possible. Just like on the way up, anything is possible. But I'll just get back to what I've said already a long time ago and what I have been repeating. When I see fiscal policy reverse, when there is a concerted effort and legislation is passed, bills are passed to reverse fiscal policy, to rein in the deficit, when I see that, okay, I'm out and I'm going the other way. But I'm certainly not doing that now when, we've just had new fiscal and, this infrastructure thing. And now Biden's saying, look, he's ready to negotiate on the corporate tax increases. So it's not going to be 28%. It's not. He's going to come down so that the deal gets done. Anyway, check out my podcast. And again, hey, if you did that rim to rim hike in one day, leave your comments. I really want to hear what your experience was like.